Hello friends, here we are again with admission of partner, retirement of a partner, death of a partner and change in profit sharing ratio. There are certain things when we are talking about, I told you beforehand also, and it's just nothing but it is reconstitution of the partnership firm. Reconstitution is nothing but it is the change in deed, change in any of the agreements which was there among the partners. That is called as reconstitution. One reconstitution can be with change in profit sharing ratio among the partners. Another may be because one partner is coming into the business, the profit sharing ratio of other partners will change. The amount of capital will be increased for the business. At the same time, the profit also has to be shared. Previously, it was shared among two partners. Let us say the other partner joining in has to be shared. So in such a circumstance, we have to check out there is slight changes which is being coming into the agreement as such, and there are certain adjustments which has to be made in the existing partnership firm. And then we come to your death or retirement. In case of that also, a partner is leaving out the business who was already existing in the business as such. So when he is leaving out, whose share or what is the amount of profit sharing ratio which he was having is being given to whom? It's being taken by one partner, that is nothing but gaining, or another partner is also sacrificing at the time of retirement, at the time of death. So these are slight changes which comes when we are talking about reconstitution. This is nothing but you are making the changes in your agreements with relating to sharing of profits, with relating to accumulated profits. Now what is accumulated profits? The profits which were kept aside for the business, or the reserves which we are talking about is kept aside for the business for future uncertainties. So this amount of profits, like you have general reserve, reserve fund, you have profit and loss balance, you have the workman compensation reserve or fund, we can say workman compensation fund, investment fluctuation fund. So these were kept. As in 11th class we have studied the difference between provision and reserve. Reserves are kept out of profit and provisions are created before arriving at the profit. Okay, so these reserves which were created was according to the profit sharing ratios of the partners previously. So in case of any reconstitution, so such kind of profits decision has to be taken. That is nothing but whether they want to continue with general reserve with changes in the profit sharing ratio, or on admission of a partner, on retirement of a partner, on death of a partner. Are these accumulated profits to be continued in the business, or it is to be taken or it is to be continued in the business, or it is to be removed off, or it is to be written off, or it is to be given to the partners who have contributed towards the future uncertainties. Now the reason behind that is because if they are continuing with this reserves, because reserves, a question may come in your mind, sir, reserves should be continued. Whether a partner comes into the business, whether a partner goes out of the business, reserves should be created. But the problem is, if there is any change in profit sharing ratio coming, if there is any amount of partner leaving out, his share will be given to somebody else. In such a circumstance, there are possibilities that the partner who is going out of the business, his share will be taken by somebody. His share will be taken by somebody. That is the existing partner. Or supposing the profit sharing ratio is being changed between the existing, means no partner is leaving out the business. Partner is still continuing in the business, but they decided to share the profits and losses in a different ratio. In such a circumstance, we need to understand one thing, that is nothing but in case if they are going ahead with changing their profit sharing ratio, there are possibilities that one partner may gain, other partner may sacrifice, or chances are there that one partner gains, one partner doesn't gain anything or loses out anything, but one partner sacrifices. So in such a circumstance, when they are continuing with the business and these reserves are kept in the business without or undisturbed, in such a circumstance the amount of profit which he has foregone previously to create this reserve, the partner who is sacrificing will be losing out. So that's the reason when a partner is gaining, the share from the continuing partner or is leaving out the business, in such a circumstance the gaining partner should compensate to the partner who is sacrificing towards the share by losing out in retirement, that is he is going out of the business, and in case of death also he has or his executor needs to get this amount, because the partner who is gaining in future this reserves, when it is being distributed or this reserves are they take a decision that no longer reserves are required. So in such a circumstance the partner who is gaining may get more share. That is the reason they go ahead with the distribution of or the compensating part when they continue with reserves. If they don't want to continue with reserves, when there is change in profit sharing ratio, when there is admission of a partner, when there is retirement of a partner, in such a circumstance these general reserve fund and WCR, of course WCR and investment fluctuation reserve, that is nothing but WCR means workmen compensation reserve, if they are specific reserves which are being created, so they have different treatment if the claim comes. But talking about reserve fund, general reserve, contingency, if you see on the liability side of the balance sheet, it is to be credited to all the partners in case of change in profit sharing ratio. In case of admission of a partner, it is to be credited to old partners. In case of retirement of a partner, it is credited to all the partners. In case of death of a partner, it is credited to all the partners. Similarly, when there is accumulated profits, there are accumulated losses which are nothing but your deferred revenue expenditure. The losses which are there or the expenditure which is spread over a period of time, that is the losses. Usually these are of two types which is being given in the usual circumstances, that is nothing but advertisement suspense account and your profit and loss balance. So in case if they want to continue with this accumulated losses, the gaining partner has to get this amount of compensation from the partner who is leaving out in case of retirement, in case of death, okay, and in case of change in profit sharing ratio and admission, the partner who is gaining has to compensate it to the partner who is sacrificing has to compensate it to the gaining, that is nothing but it becomes reverse, that is nothing but sacrificing partner's capital account debit to the gaining partner in case of change in profit sharing ratio. In case of admission, it will be nothing but the new partner has to compensate, who's on the new partner has to compensate. Please concentrate on this part. New partner is always on the gaining end. That's the reason he needs to compensate this amount if they want to continue with the losses in the future as such. Of course, in case of your retirement and death, the partner who is leaving out, that is retiring partner and death, deceased partner's capital, we are going to debit it, and the gaining partner will be credited with this amount. I'm sorry. So coming back to your next part, that is I was talking about your workmen compensation reserve. Okay, treatment number 1. Usually it comes for 3 marks or sometimes it comes on as an adjustment for 6 markers in your board exam as such. WCR, that is nothing but workmen compensation reserve. Now this workmen compensation reserve, okay, it's a specific liability which is being created. Now first and foremost, let me be very particular about it. I told you about reserves part. Reserves, that is WCR, reserve fund, contingency, okay, and contingency reserve fund, general reserve, that will be shown on the liability side of the balance sheet. And if in case of reconstitution, at that moment of time, these have to be distributed apart from WCR and IFR, because these are the two items which has some specifications, or sometimes they may have little adjustments coming into existence. If there is no adjustment related to that, and if you see these items on the liability side, you need to credit it to the partners. Credit it to the partners, that is old partners in case of your admission, in case of change in PSR to all the partners, in case of retirement and then to all the partners. So these are, that is reserve fund I am talking about. RF is nothing but reserve fund. You have general reserve, GR, you have reserves, you have WCR, you have IFR coming into existence. So these will be shown on the liability side. There was one more question. They are hearing it for the first time. That is, many of them think that contingency. Contingency meaning is the unforeseen events may or may not occur. So contingency reserve also is a kind of reserve which is to be credited to the partners in case of change in PSR, same logic, that is nothing but all partners. In case of your retirement, only to all partners, and in case of death also all partners. Only in admission it is to the old partners. But again, think twice when we are going with change in profit sharing ratio. So if there is this topic or this chapter is there in change in profit sharing ratio, you cannot credit it to all the partners until and unless there is no evidence stating that it is to be continued in the business. If it is continued in business, the gaining partner has to compensate the amount of profit to the or accumulated profits to the to the sacrificing partner. But if problem is silent, if nothing is specified, it is credited to all the partners. So let us just begin with your workmen compensation reserve. What is this workmen compensation reserve treatment is? There are situations in which this workmen compensation reserve comes into existence. Now first and foremost, let us just see with an example there how to go about with this workmen compensation reserve. Now as I told you, in the balance sheet they will be giving you workmen compensation reserve. That is nothing but workmen compensation reserve will be shown on your liability side. Let us say it is shown as 1 lakh. How much it is shown as? 1 lakh. It is shown as 1 lakh. Now there is no information given. There is no information given. Let me just write it here very clearly. Workmen compensation reserve. It is shown on the liability side and asset will not be there. So 1 lakh. Nothing is given. No other information is being given. And the situation is, first situation is, this is workmen compensation reserve. So what are we going to do? Only workmen compensation reserve. That is nothing but we are going to credit it to all the partners. In case of change in PSR, the entry will become all partners, capital account debit 1 lakh. That is individually you need to show. Individually you need to show. Is it clear? So imagine I am having 4 partners A, B, C and D. Now this is for an example, for easy calculation I am using it. 1 lakh is the amount of WCR which is being given, or workmen compensation reserve. So A, B, C, D are there. They are sharing profits and losses equally. So in such a circumstance, when they are sharing equally, what did I tell you, that when change in PSR occurs, or the chapter number 3 in case of your partnership or the blue book which we called it as, or in your admission reconstitution of the partnership as such. So in such a circumstance that the profit sharing ratio is equally, nothing is specified means, as we have learnt in fundamentals, it's believed that if nothing is specified, it is taken as equally. So imagine it is taken equally. So 1:1:1. So what will be the ratio? 1:1:1. So 4 parts it is being divided. So 1 lakh you are going to credit it to A's capital and B's capital. So I was writing all partners capital account debit to WCR, which is wrong. Why which is wrong? Because liability is there. You need to cancel the liability. So when we need to cancel the liability or we need to remove the liability in such a circumstance, we are going to debit that liability, because liability shows which balance? Credit balance. So in order to make it as or remove, or it is to be transferred to some other account, in such a circumstance we need to reverse. So entry in this case will become workmen compensation or WCR account debit WCR account debit to A's capital account and to B's capital account and to C's capital account. That is nothing but we are talking about 1 lakh on WCR, and second is 25,000 and 25,000 for B's capital account. 25,000. Now, if the same situation occurs, this is for change in PSR of partners. If the same thing occurs in case of admission, let us say only 2 partners are there and C joins. So A is to B is sharing the profits equally. So in such case, the entry will become WCR account debit. WCR account debit, that will be nothing but 1 lakh to A's capital in their old profit sharing ratio. Which ratio, sir? In their old profit sharing ratio, this will be distributed. That is 50,000 each. In case of change in PSR to all the partners, in case of admission, it is only to old partners. Then coming to your retirement and death, the same way what we have done it for change in PSR. That is nothing but, imagine A, B, C, D are there. D is retiring. In such a circumstance also, you are going to write the same entry, WCR account debit 1 lakh to A's capital, to B's capital, to C's capital and to D's capital as such. Similarly, for death, let us say A, B, C, D are partners and C died. In such a circumstance also, it will be credited to deceased partner's capital account. So these are when there is no claim coming into existence. As I told you, WCR is a specific reserve. Now let us say there is a claim coming into existence. Now when claim is coming relating to this liability which is being there, or this reserve which is there, specific reserve which is being there, let us say in additional information, that is nothing but your adjustment. In additional information, it is being specified. In additional information, it is being specified that there is a claim. Now this claim can be more than the reserve, this claim can be less than the reserve, okay, this claim can be equivalent to reserve, this claim can be exceeding the reserves as such. So first we are going to see that the workman compensation claim towards workmen is lesser than the reserve. That is, imagine a situation that 1 lakh is the reserve which is there with us. How much is the reserve? 1 lakh is the reserve. In such a circumstance, when 1 lakh is the reserve and the claim is coming, let us say around 50,000. Around 50,000 is the claim. How much is the claim? I told you 50,000. So in such a circumstance, to the extent of claim which is being there in adjustment, whether it is change in profit sharing ratio, whether it is admission, whether it is retirement, whether it is death, the claim amount which is being there in the new balance sheet, that is after reconstitution, that is after admission, that is after retirement, that is after death of a partner, the amount of claim, instead of WCR in the new balance sheet, we are going to see workman compensation claim of rupees 50,000, and remaining 50,000, whatever is the reserve, means reserve was existing how much? Reserve was existing towards the amount of 1 lakh. But what is happening? The claim is up to 50,000. So when claim is up to 50,000, the remaining amount of 50,000 which is being there, in case of change in PSR, change in profit sharing ratio or PSR, we are going to credit it to all the partners. So in this case, the entry will become WCR account debit. Now sir, why are you writing 1 lakh? Because the entire reserve is being divided into 2 parts, one towards the claim, other towards crediting it to the partners. So 1 is nothing but 1 lakh WCR to workmen compensation claim 50,000 and remaining 50,000 to all the partners. In which ratio? In their old profit sharing ratio. Which ratio, sir? In their old profit sharing ratio. And in case of admission, it will be WCR account debit 1 lakh to workmen compensation claim 50,000 to only old partners. It is to be distributed. In which ratio? Old ratio. Let us say A and B are sharing equally. So to A's capital to B's capital. This is in case of your admission. Now coming back to your retirement and death, and in case of retirement and death, the same entry will come, that is nothing but WCR account debit to claim to all partners including retiring as well as deceased partner. This is the treatment when we have the claim which is lesser than the amount of reserve. Reserve is more. Now we are going to see the next situation. That is, the next situation is when claim is equal. Claim is equal. Let us say that the WCR, take the same example. Let us say the WCR is coming up to 1 lakh and in additional information it is being given that claim towards the workmen is rupees 1 lakh. So here in this case you can say workmen compensation reserve is 1 lakh and the claim is also 1 lakh. So in such circumstance, no reserves will be distributed to partners, but rather in the new balance sheet, where after reconstitution, let us say change in profit sharing ratio, admission, retirement, and then the amount of reserve will be converted into claim of 1 lakh. So new balance sheet it will be appearing at 1 lakh. And if you are asked to pass the journal entry in case of change in profit sharing ratio, change in PSR will become WCR account debit to workmen compensation claim 1 lakh. And in case of admission, we are going to write WCR account debit to WCC. Any change? No change. So in case of admission, in case of retirement, in case of death, in case of change in profit sharing ratio, the entry will become, that is no amount of reserve will be distributed to the partners or credited to partners. Okay, if the amount of reserve will become towards the claim. So that is nothing but when the claim is arising, we are going to make the payment. So it is not to be credited to all the partners. Then the next situation which we are going to see is with relation to your workmen compensation reserve amounting to 1 lakh. Now in claim, additional information, claim is coming up to 1,50,000. Okay, so workmen compensation claim is coming up to rupees 1,50,000. Now reserve existing, हमारे पास रिजर्व कितना बचा है? रिजर्व बचा है 1 लाख, लेकिन क्लेम कितना आ रहा है? 1,50,000. So that means it's resulting in increase of your liability. So that you need to pay. So in simple terms, when profit is being shared or when anything comes, you know about the partnership rule. What is the partnership rule? That any losses are there, it is to be borne by the partners, that is the owner. So in such a circumstance, this amount of 50,000 will be borne by the owners, but it will not be directly by them with an account, because there is a revaluation. In Reconstitution, we prepare revaluation account. That is nothing but we are revaluing your assets and liabilities. So in such a circumstance, when claim is coming more, when workman compensation claim is coming more, in such a circumstance, you need to compare how much it is more as such. So this amount of excess from reserve to claim, that is to be adjusted to an account, that is called as revaluation account. Which account, sir? Revaluation account. So in this case, we are going to see that is nothing but in case of change in PSR, it will be workman compensation reserve 1 lakh and revaluation account debit, that is nothing but WCR account debit, and revaluation or reval account debit 50,000 to workman compensation claim 1,50,000. And in case of admission, it will be workman compensation reserve account debit same 1 lakh, revaluation account debit 50,000 to workman compensation claim coming up to how much, sir? That is nothing but 1,50,000. And same is the case with your retirement. But only difference comes in the second entry. This amount of revaluation loss is to be borne by all partners. That is nothing but the second entry has to be passed for that. That is nothing but all partners. That is all partners capital account debit. That is nothing but 50,000 to WCC or revaluation. It will be revaluation. What is there? We have to adjust the amount of loss. As I told you, that nothing but if you are going to go ahead with your amount of loss, that is to be borne by the partners, but they will be bearing it with the other that other account called as revaluation account, which is other name for revaluation account is profit and loss adjustment account as such. So in case of this also, it will not be all partners, it will be old partners capital account debit, old partners capital account debit to revaluation account. That is the amount of the excess amount which is more than the reserve. And in case of retirement death, the same entry WCR revaluation to workman compensation claim, only the amount of loss or revaluation part that has to be borne by different partners in different situations. That is nothing but in case of admission old partners, in case of retirement it will be all the partners. There is one more situation that is in this only, that is nothing but you are going to show a new balance sheet. The question may arise, sir, what will you write in new balance sheet? In new balance sheet, you are going to write workman compensation claim of 1,50,000. So if you see the depth analysis of it, nothing but one liability is coming down, other liability is vertically increasing. That is further when you become thorough, you will be able to understand that. Capital is also a liability. So यहाँ से घटा और वहाँ पे add हुआ. That is the situation. Now, next part is, or there may be a situation where there may be a confusion coming, or many of the students get confused, or all of us get confused. Now there is no reserve. Imagine normal balance sheet is given, or last case probably, I know the video is becoming little longer, just last case of it, sometimes there is no WCR, or there is no workman compensation claim, but there is no workman compensation reserve, but there is workman compensation claim coming. Okay, so in adjustment, in such a circumstance, when claim arises, there is no reserves, but claim is coming up to 50,000, right? This is an extract of balance sheet. You can see liability side, rupees, assets, rupees. Okay, so workman compensation claim is 50. There is no reserve. In such a circumstance, it is treated just like a liability coming up, or liability increase. So you know, I told you that when we are revaluing the assets, the increase in asset, decrease in asset, increase in liability, decrease in liability, according to the Reconstitution, we need to take up. In the same fashion or in the same manner, when we are talking about workman compensation claim, it is coming up to 50,000. So when it is coming up to 50,000, this amount of 50,000 which is coming, that has to be taken, or that has to be accounted to a revaluation account. So entry for this will become revaluation account debit, because it's a liability increase. So rupees 50,000 to workman compensation claim. And if individually you are asked to pass the entry in this situation, then it's a loss for us, it's an increase in liability, it's resulting in loss for us, the partners have to bear from their end. So that is through revaluation account. So entry in case of change in PSR, revaluation account to what you call workman compensation claim. It is the same entry for change in PSR, same entry for your admission of a partner, same entry for retirement, same entry for death, but the last or the second entry will differ. That is nothing but the second entry which is differing is this amount of loss or increase in liability will be debited to old partners in their old profit sharing ratio, old partners capital account debit 50,000 to revaluation account in case of your admission. In case of change in PSR, it will be all partners capital to revaluation account. To which account? To revaluation account. Then in case of retirement death, the same entry of 50,000 is to be passed. Now this is when you are asked to pass the entries for the given treatments as such. Hopefully the video which I have made will be helpful for you for the treatment of workman compensation reserve. If you liked it, please let me know. I'll go ahead with the next video, which is coming shortly with IFR treatment as such. Thank you. Till then, have a nice day.